Are you facing a sudden, unexpected financial emergency, but you are absolutely terrified to apply for a loan because you are retired and you think your credit score or lack of a traditional paycheck will get you immediately rejected? Listen to me. When you are on a fixed income, living on Social Security, a pension, or retirement account distributions, a sudden $300 car repair or a surprise medical bill can feel like an absolute crisis. It panics you. And in that moment of panic, you start looking for fast cash. You see an app like Possible Finance and you wonder, do I qualify for this? Or am I going to get turned down because I don't clock into a regular 9-to-5 job anymore? Today, we are going to strip away the confusion, the fear, and the guesswork. I am going to tell you exactly who qualifies for a possible finance loan, how they look at your money, and most importantly, whether this is a safe financial step for your retirement or a dangerous trap you need to run away from right now. Let's start with the absolute truth about how this company works. Possible Finance is a mobile app-based lender that offers very small, short-term loans, typically up to $500. Now, why do people flock to them? Because they do not check your FICO credit score. Let me repeat that. There is no traditional credit check when you apply. For so many of you who have a damaged credit history, or maybe you haven't used credit in so long that your score has gone dormant, that sounds like an absolute lifeline. You think, thank goodness, my credit score won't stop me. But you must understand that just because they do not look at your credit score does not mean they just hand out money to anyone who asks. They look at your real-world financial habits. They use a proprietary algorithm to look directly into your bank account. So, let's go through the strict qualification checklist so you know exactly where you stand. First, you must live in an eligible state. Possible Finance is currently only available in about 30 states. If your state regulated these types of high-interest short-term loans out of existence to protect consumers, you simply cannot get one. Second, you must have a valid Social Security number. Third, and this is the big one that affects you as a retiree, you must link a checking account that shows consistent income deposits. The absolute bare minimum requirement is usually an income of at least $750 per month. Now, pay close attention here. This is where the fear creeps in for seniors. You think, I don't get a paycheck from an employer. Does my Social Security count? Does my pension count? Do my monthly distributions from my IRA or 401k count? The answer is yes, they can count, but only if they are set up as regular, predictable direct deposits into that specific checking account. The algorithm is looking for consistency. It wants to see a steady flow of money coming in every single month, proving you have the cash flow to handle a repayment. If your retirement income is sporadic, say you just pull money out of your investments whenever you feel like it, or you get cash from odd jobs here and there, the algorithm is going to look at that account and hit the reject button. But let's look at what else that algorithm is searching for when it opens up your bank account history, because this is where so many people get blindsided. It is analyzing your daily financial behavior. It wants to see a positive balance. If your checking account is consistently sitting at zero, or worse, if you have a pattern of frequent overdrafts and insufficient funds fees, you are not going to qualify. To the lender, those negative balances are a massive red flag that your regular monthly expenses are already completely draining your account, meaning you do not have a single dollar left over to pay back a new loan. They also look at your other debts. If the system sees that you already have multiple outstanding short-term loans or other cash advances draining your funds, it will deny you. They want to be the only cook in the kitchen, so to speak. Now, let's say you check all those boxes. You have the stable Social Security direct deposit, you have a positive balance, no overdrafts, and you live in an approved state. You apply through the app, and within minutes, you are approved for a $300 loan. Unlike a predatory payday loan that demands you pay back the entire amount plus massive fees out of your very next check, Possible Finance structures this as an installment loan. You pay it back in 4 equal payments over a span of about 8 weeks. And they report your on-time payments to the credit bureau, which can actually help build or repair your credit history. On the surface, it sounds decent, right? It sounds like a gentle way out of a tight spot. So here is your actionable takeaway. If you are in a financial emergency right now and you are considering an app like this, I want you to exhaust every single alternative first. First, look at your own bank. Do you have a small savings cushion anywhere that you are afraid to touch? Use it. That is exactly what an emergency fund is for. It is far better to temporarily deplete your own savings than to pay triple-digit interest to an app. Second, if the emergency is a medical bill or a utility payment, do not borrow money to pay it off instantly. Call the billing department directly. Explain that you are on a fixed retirement income. Almost every utility company and medical provider has specialized hardship programs, deferred payment plans, or senior discounts that will cost you absolutely 0% in interest. Third, if you absolutely must use an app like Possible Finance because it is your final resort to avoid an absolute disaster, you must have a flawless repayment plan. Do not borrow a single penny more than you absolutely need. The moment the loan hits your account, go into your calendar and mark those 4 biweekly payment dates. Possible Finance does allow you to reschedule a payment up to 29 days inside the app without a penalty fee, which is a saving grace if your Social Security check falls on a weird day. Use that feature if you run into trouble, but make it your absolute obsession to pay that loan off completely in those 8 weeks so you do not get stuck in a cycle of borrowing again and again. Your financial security in retirement depends on protecting your cash flow. Know what you qualify for, understand the true cost of what you are signing up for, and never let fear drive you into an expensive debt choice.